Oh boy, here we go again. Back to work. Hope you guys had a great day out there. FOMC is behind us. We got Reaction Thursday, one of my favorite days of the year, right around the corner. It's Wednesday evening, 4th day of May, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, watching for the first time, it's great to have you with me. My job tonight, help us find the best trades, setting up for Thursday. Not just any Thursday, though. Reaction Thursday, the Thursday where all the pros come back to work after today's FOMC announcement. We have a lot to cover in tonight's video. There are plenty of great trades setting up for tomorrow. One of the best parts about the FOMC announcement is that it gets the markets all riled up and gives us a bunch of great trades to look forward to the following day. I'm going to cover all my favorite trades in tonight's video. That way you have a roadmap to make some money on Thursday's trading session. And we're going to cover all our favorite markets. Got the crude oil, got the Nasdaq, got the S&P on our radar for tonight. We have a lot to cover in tonight's video. Before we jump in and get this party going, you better subscribe to our YouTube channel. Make sure you subscribe. I publish this video every evening, my best trade ideas right on this video, so make sure you subscribe. Set those notifications that we always get the updates every time we upload something new. Also, any questions for me, drop those questions. I do personally go back and answer all the questions, so drop those questions if you got them. And if you enjoy the video as much as I enjoy making it, do me a favor, hit that like button tonight. I appreciate you guys sticking around tonight, carving some time out to get ready for tomorrow. But speaking of tomorrow, though, right, let's get ready for Thursday, Reaction Thursday. Where's the low-hanging fruit for tomorrow? Well, boy, oh boy, everything bullish. What a difference a day makes, right? Big bull run on the S&P, big bull run on the Nasdaq. We definitely saw a big bull run a little bit earlier today on the oil, right? But we've got a bull market on the oil. Everything is bullish here right now, and for the most part, we have some really big moves higher that we saw today. Whenever we see a big move in one direction, we always expect to see one of two scenarios here, and I'm going to throw in some reversals on top of that. So I'll tell you, I got some pullback setups I'm watching, some range setups we're watching, some reversal trades we're watching as well. So trust me, we're going to lay out all the best setups in tonight's video. You'll be locked in with a good game plan here for tomorrow. Before we jump into the charts, though, speaking of tomorrow, let's get all on the same page here, because tomorrow, I'll tell you, tomorrow really is the day. Tomorrow really is kind of the perfect storm, if you will, or maybe better said, the eye in the middle of the storm, right? We had the FOMC this afternoon. We have jobs coming out on Friday morning. And so tomorrow is kind of the day where, with the exception of OPEC tomorrow, bright and early, with the exception of OPEC, we really have pretty much a wide open day. So traders will definitely be, I would imagine, using this wide open day tomorrow to make their money ahead of the uncertainty we have going into Friday's non-farm payroll report. The only big variable we have, for example, we got oil tomorrow reacting to that OPEC report. Be aware that OPEC announcement usually hits the news wires around 7:45 a.m. Eastern time, around lunchtime in Europe. So if you're with us tomorrow in the trade room, we open up at 8 o'clock Eastern time. We're going to probably already hear from that news report, from the announcement tomorrow before we get started trading the U.S. session at 8 o'clock, 8:15 Eastern time tomorrow morning. But be aware, though, this is probably the one big variable that kind of, makes oil a little bit of a question mark overnight. What will OPEC say tomorrow? Obviously, prices are rising right now on crude oil. It looks like we're trying to make a run back to 110, 113 here, possibly later on in the month of May. And so, everybody's waiting to hear what OPEC's going to say. Will they pump more? From what we're hearing right now, it doesn't sound like they have the ability to do much more than they have right now to offset. We heard today a proposed ban on Russian oil out of the EU. So I would imagine the whole world of oil traders tomorrow will be listening in very closely, and it's definitely something that can really move these markets pretty good for us to get the day started tomorrow in the trade room on oil. We do have some jobless claims tomorrow, but I wouldn't worry about that too much. Tomorrow is all about the reaction to, again, we'll hear from OPEC in the morning, but it's all about the reaction to today's FOMC announcement. And in case you missed the headline, they did raise rates a 0.5%. And the reason why the markets rallied, I assume, is because they pretty much they pretty much put the axe on any 3/4 point, or full percentage point raises. They were pretty specific in the announcement this afternoon that they are scheduling a couple consecutive 0.5% bumps higher. But we were speculating yesterday, maybe we get a surprise, full 100 basis points or full 1%. And I think that's why the markets really reacted so bullishly to this, because it was kind of like a relief. Okay, we're not going to jack rates up that quickly. But anyways, tomorrow is all about the reaction on this. There's no major news except for that OPEC meeting. And then remember, just like today, be careful tomorrow afternoon, because we're going into that employment number on Friday. That's why I said we kind of have the eye of the storm here tomorrow. We got big news this afternoon, nothing really big tomorrow, and some more big news coming on Friday. So tomorrow's the day to make your money. That is for sure. Wide open day tomorrow. Looking forward to a very good day in our trade room. Back to our charts though. Now you have a general idea of what to expect for the lay of the land tomorrow. Where's the trades to be for tomorrow? Big moves up across all three of these markets. Now let's cut to the chase. Whether you trade one of these markets or you trade all of these markets, I'm going to cover all my favorite trades throughout each one of these charts for tomorrow. We'll go S&P, NASDAQ, and crude oil. And I'm going to mix it up a little bit as we go throughout the entire video. There'll be different trade variations, different advanced tactics, different reversals and breakouts, and different ways in which you can use the same fundamentals we talk about throughout the entire video. And you know me, you know how I like to do it. I like to save the best stuff for the end of this video, wrap it all together to give you guys some really good takeaways towards the end, so I'll give you something to stick around for all the way to the end. All right, guys, so 1, 2, 3. Let's jump right into the S&P 500. I'm a little bit late, as you saw on the video recording tonight, so I'll probably make this video a little bit shorter than normal, but we'll try our best. We'll cover as much as we can. What's the most important aspect on the S&P here for tonight? There really are two big important factors on this. One is the sheer strength of that move. Anytime we see a really strong move in one direction, we expect a pullback and a retest of that high. Now, once we get a retest off that high, do we get a reversal off the high, rejection off the high, or do we see a breakout through that high? Simple as that, right? Simple as that. Anytime we see a strong move in one direction, we expect a pullback to attract buyers into the market, and we expect a retest of that high. From there, do we bounce and reverse back down, or do we break out and go higher, potentially up to that next level at 43.60, which does look pretty likely when you look at this on a bigger picture chart. So we have that going for us. What's the second piece of the puzzle? The second piece of the puzzle is the sheer size of this move. It's a big move. It's just not a small spike high. It's a very large move. Now, whenever we see a large move in one direction, we know that all of this market going higher barely pulled back. I mean, look, there were no traps. See that? There were no traps for the most part, right? No traps getting filled on these, right, on this pullback. So imagine all the kind of professionals, all the experienced traders who know better than chasing a bull market. They're still waiting down here. So the moral of the story is, whenever we see a really big move in one direction, we have to think that a lot of people are going to look at this and say, whoa, this is way too high to buy up here. I'm not going to buy up here. You've got to give me something more attractive. Give me a discounted price. And so we expect to see a relatively deep pullback. Now, sometimes these big moves in one direction, sometimes nobody dares take themselves out of that position. Sometimes all the buyers who bought down here, they're expecting to see another leg higher. And so they stay in these positions. They don't take profit. And nobody dares sell this thing because it's so darn bullish. And so sometimes the markets will start to go sideways in a trading range. Buyers aren't going to buy anymore, because it's too high. Sellers don't dare sell into it because it's so darn bullish. And so the market will kind of tread water and go sideways. And so we oftentimes see a trading range after a big move, in one direction. We saw that this morning on the crude oil futures when it spiked up after that announcement out of the EU. So we are expecting a range or a really deep pullback. And maybe if we're lucky, we'll get both of them tomorrow and use that as well. Those are the two most important components that we're seeing right now. Now, what do the buyers want? The buyers want to buy pullbacks. Now, buyers can buy a shallow pullback. They can buy a deep pullback. they can buy a breakout going higher. If we see a trading range, they can buy the edges of that trading range. I'm going to talk a lot more about these, by the way, as we go deeper into this video. What about the bears? The bears have to be careful right now because obviously it's a very strong bullish move. What would the sellers like to do? Well, I mentioned before, if we get that pull back and go up and retest, the sellers would love to get one of those double top reversals. Love double top reversals or two try failures off the high. I would also imagine too that during this pullback, because after all, this is Reaction Thursday tomorrow, during that pullback, the market may decide, you know what? We read it wrong, right? We read it wrong. We may have overreacted to that announcement. Maybe the market rejects this high, and now we reverse and go back down in, right, to that range we came from earlier on in today's trading session. So sellers can wait for reversal. They can wait for that pullback and that double top. All right, let's talk about how to trade this stuff as we pull back, as we go sideways here. Now remember, the Nasdaq is very similar to this. So what I'll do is I'm going to cover a couple on this chart, and I'll cover a few more different setup variations on the Nasdaq as well. Let's talk about the deep pullback here on the S&P. Okay, we'll talk about the range, and we'll talk about the shallow pullbacks on the Nasdaq. Let's cover the deep pullbacks on the S&P. There are really two main things that you want to look out for whenever we have a deep pullback. The first one is you want to look for a two-legged pullback. Two-legged pullbacks are pretty common when you have a deep pullback. And what you want to do is draw that trend line down off the high and try to use that trend line ideally as support on the pullback. Again, we know we have a strong bull trend. We know it's a big move up. We're expecting a relatively deep pullback to attract in more buyers, and we anticipate they're going to go back and retest that high. Watch out when the market pulls back, because when it pulls back with a couple legs to it, it will oftentimes use that trend line, right, on the opposite side of it, right? So as it pulls back, it'll use it. If you draw that trend line like that over there, right? As they pull back, they try to come up and use those trend lines for support levels. So watch that as we pull back here. Now, another thing that's very, very common in a deep pullback is we oftentimes see a lot of momentum as we go lower. That's exactly what we like about deep pullbacks. My favorite way to trade a deep pullback is to trap in some of the sellers who basically confuse this for a reversal. And the way I like to do that is I like to use basically their stop losses as fuel. So now we get that deep pullback down into some support levels below these highs here. Now, let's get some bears coming in and trying to take that as a reversal. I'll talk about a reversal in a second. What I want to do is let them try once, let them try twice. Once those bears try twice on the pullback, now think about where their stops are. And don't think of them like stops. Think of them like pain points, right? This is where if you were a seller, that's where you're squirming. That's where you're losing money. That's where you wave the white flag. That's where sellers have to buy themselves or short squeeze, cover the shorts on the way back up as it goes higher. This is where I'm looking for my entry. So again, there might be a trend line coming down on this, so kind of try to use that trend line, you know what I mean, as that area of support there as well. So we're buying into those stop losses because, guys, the easiest money you're going to make in a deep pullback is waiting for those sellers to come in and try to get short. Then you can go in and buy right into those stop losses. Now, don't forget, once the market starts to run higher, we almost always see a trap entry right below one of the swings on the way back up into this area. It's usually somewhere between this area right there to that high and that prior swing. That's when we get that follow-up trade. So again, strong, big move higher. We'd love to get that really deep pullback. Get that deep pullback, trap in those bears with a failure setup. Then as we go higher, look left, find those prior swings and grab that trap. Where's my target? My target now is back up to retest the high. Failure pattern, trap pattern. Now, guys, I know most of you all have taken the free trading class on our website. You've learned the setups. There's hundreds of examples of these in the free trading class, right? You've learned the setups. You've learned the rules. I get so many great emails and comments every week about people who are using that free class to make money on their own account. But listen, if you're here for the first time tonight, if you haven't watched it before, or if you haven't taken that free course yet, if you're one of the few folks who hasn't learned these setups, what are you waiting for? Make sure you grab it. I'll put a little link up here for you in the upper right-hand corner. If you're like me and you hate missing the best trades each day, or you're sick and tired of taking so many losses, that free trading course, that little link that popped up, will be the perfect roadmap if you're trying to make money in these markets every day. You'll learn my 4 favorite entry setups, all the rules we use. I also include hundreds of examples of how we apply things like failures and traps and pullback combos to our favorite futures markets. So don't be shy. Grab that link up top there. You're going to love that free trading course, and I really appreciate you guys hollering at me here these last few weeks, sharing some of your results of how you've been using it in your own trading. Now, let's say for example now we get that deep pullback, right? Deep pullback comes in, we buy off that low, we get that re-entry back to the high, and we retest the high. Now what do we do? Now we look for that double top reversal. At this point, the buyers bought nice and low. They take their profit up at the high. Now, anybody buying into that high are the weak hands in the market, unfortunately. Now, let them try a couple times, right? Let them try once. Let them try twice. And once those buyers try a couple times, remember, this is the weak hands, right? These are the small accounts. They can't defend themselves. This is not where the professionals, the big lot traders are buying. They're buying that deep pullback because they have the experience to know better than chasing it. Let those inexperienced traders, those rookie traders, buy right into those highs. Now, think about, where are their stops? No. More importantly, where's their pain? Right? Where's the pain? Because that's where the money is, right? Go right out after that pain. Look for that strong signal candle, right? And then grab that short coming off the high. Now, really important. Where does the market want to go at that point? It wants to take out that low. It wants to take out that low right there. And then from there, back down to that trading range. So before we take out that low, you go out, you find a new trend line off those lows. You bring it up around that high, and repeat after me, first test is the best test. This is always one of my favorite trades, is that follow-up trade. It's a 2-try failure, that double top reversal off the high into, and this is my favorites are traps. My favorites are pullbacks or failure patterns off that high. I'm just simply kind of illustrating this for you, here right now. Those are some really easy ways to make some money on the pullback here right now. Whether you're buying the pullback or selling the failure off the retest. But now I know what you're thinking. What if this thing pulls back? At what point can we start to sell this? Here are 2 reversal patterns you want to keep on your radar here. One is a 1, 2, 3 reversal. How's it look? We want to see a deep pullback again, right? Get down into some of these support levels. Now, instead of the bears trying once, twice, and failing, which we kind of hope they do, if they do hold this and they can jump off the moving average, okay? Remember, the key is they have to jump, okay? I don't care how deep that first leg is, okay? That first leg can come all the way back here. I'm still going to try to buy it back up again. Okay, but if the bears can get it down, they can pull it back. If they can hold the pullback now to the moving average, and if they can jump off that moving average now, okay, that jump is what gives the bears control of this momentum. Where do they want to go? They want to go back down into that trading range. Where's the entry going to be? Same as before. Draw that trend line off that low. Anchor it up around that high off that 1, 2, 3 reversal. Look left. Find those prior swings. Get above prior swings. Grab those traps. Grab those failures off the moving average. And again, sell right into their pain. Traps, failures. There's some pullback combos. You're going to learn this in that free trading class I linked up in the upper right-hand corner. Where is the target on this short? We know where the market wants to go, but what you always want to think about is that the first leg and the third leg of these 1, 2, 3 reversals like this are usually going to be symmetrical, okay? The first leg and the third leg are oftentimes the same. So use that as your targets as we go here. I've got one more reversal pattern. Why don't we talk about that one on the NASDAQ? On the NASDAQ, I want to talk about a range and I want to talk about a breakout. All right, let's go to the NASDAQ here now as we get deeper into this lesson. So very, very simple game plan here on the S&P. Over to the NASDAQ. NASDAQ is very, very similar to the S&P as you can see here right now. What's the key component? First thing, strong, real strong. What does it tell us? Anytime we see a strong move in one direction, it doesn't matter how big it is, really. It really doesn't. Anytime we see a strong move in one direction, within reason, we expect a pullback to attract in more buyers, right? And a retest of that high. Once we retest the high, do we break through and go higher, or do we get one of those gorgeous reversals, those double top reversals off the high, right? That is very important. Also, what else do we know? We know it's a very big move. Now, I would say probably not as big as the S&P. You can obviously see that. The S&P looks a little more pronounced than the NASDAQ does, but it's a pretty darn big move, right? Big move. So what does a big move tell us? Big move tells us that, well, first of all, it might be so strong that nobody dares sell. And that means, and nobody wants to get out either. Maybe people don't want to get out of their trades either. And the price just sits here and goes sideways. Okay, so ranges are really, really common. And again, this will also be something we're looking for here on the S&P, or a really deep pullback into some of these buy zones here as we go. All right, we've talked a lot about this stuff already. We talked about the two-legged pullback on the S&P, use that trend line, watch those trend lines. We talked about the deep pullback, the two-try failure, and that trap entry on the way back higher. We talked about then the 1, the 2, and the drop, right? Find that new channel. And where was the goal? The goal was to go back down to retest that low, right? That failure, that trap, that two-try reversal, and hit them on the first test of that new channel. We just talked about all of that on the S&P. We also talked about that 1, 2, 3 reversal, right? We get this thing pulling back. They jump off the moving average. What do? We find that low. We find that high. We drill down to our faster time frame. This is a 5,000 tick chart. We are not trading a 5,000 tick chart in the trade room tomorrow morning. We'll trade a much faster time frame. Give us more feel on those entries. This is a trap setup. It's a failure setup. It's a pullback setup, right? The same stuff you guys learn in our free trading course. Now, couple things I want you to remember on this. Let's talk about a shallow pullback, for example. Okay, shallow pullbacks. So there is I would say there's a pretty good likelihood, looking at some bigger picture stuff right now, these markets continue up to some of these prior swings. We have a pretty odd, this goes to the S&P too. The S&P also has a prior low back from, what's that, April 17th, something like that. That first week of, third week of April, something like that. That big low. Okay, again, it's also there on the S&P as well. On the S&P, you'll see it pretty obviously on the S&P. On the NASDAQ, though, again, it does look like they're going to want to get up to that area, that 13,730, 790 area there on this NASDAQ. It does look pretty good there at this time. Now, with that said, we may only get a shallow pullback. So let's talk about shallow pullbacks. Let's talk about reversals here. Let's talk about breakouts as we go higher here. This is a really, really important one. So you want to pay attention to this pattern right here. Anytime we see a big move up, we expect to see a relatively deep pullback. However, we also know anytime we see this much strength, we know the odds are still pretty darn good. They're going to pull it back and retest the high. So we have some prior swings here. And again, there really weren't any traps on the way higher here. So let's say we pull back, shallow pullback. I'd like to get down to these areas personally, but, the markets don't give us everything we want, unfortunately. So if all we get is a shallow pullbacks are fine too. But what's the danger of a shallow pullback? You're buying high, right? You're buying relatively high. You're not buying at a discounted price. You're buying at a premium price. And so we want to try to do our best to buy as low as possible. And this is why a trap comes into play on a shallow pullback. Okay, now these come in all shapes and sizes, but what you want to just really think about here is if we do get just barely below some of these prior swings. Again, I know where I want to get long, right? I know where my levels are. I know where I want to, but if we get just below one of these prior swings, and then we start seeing the bears once, the bears twice, we start a little trap below that low. Remember, the odds are very good we go back to retest that high. Right now, when that happens, this will probably turn into some sort of range. Okay, it'll probably turn into some sort of range, or it will break out through that high here. So let's talk about a range game plan on this Nasdaq. The most important thing that you want to understand when it comes to a bull market into a trading range, there are three basic ways to trade it. And again, this goes right along with the S&P as well. First things first, you want to try to find a level of support below a trading range. Okay, this could be a prior swing level like that. A lot of times there'll be some sort of triangle level coming off of these lows over here. There'll be a trend line coming, something like that. It'll be some support level underneath the trading range. Now, eventually the buyers are going to run out of ammunition. There won't be enough buyers to push it through this area. Again, it's a big move higher. We may not have the appetite to keep going higher here. We'll talk about if we do though here in a second. At this point now, we want to get the pullback now into that level of support. And at this point, we're looking to use, I'm not a big fan of trying to pick one of these bottoms. Because what happens a lot of times is you'll get some nice good signal, you'll jump in here long, and then sure enough, you put your stop down below these lows. You know what happens? It comes out, stops you out, and then goes without you. And I'll tell you right now, I took those little we call them stop and runs. I took those way too many times for the first couple of years of my career. So what I did is rather than trying to pick that bottom, I just simply wait for those bears to come in and just commit off that moving average. Because once the bears come in and sell off the moving average, now we know, again, we know where their stops are. We know where sellers become buyers now. That's the key. Think about it. If you are a seller and you get stopped out, as we say in our video classes, in these areas right here, you have buyers buying because they're buying off support below the range. You also have sellers who are buying because they're on the other side of that exit, right? They're getting stopped out of those trades. So this is a very easy trade. Find a level of support below the range and combine what I call a failure setup off of that low. Now, your job isn't over yet. Where does the market want to go at that point? It wants to go back and retest the high of that trading range. So, as we start going higher now go out and mark up that new channel. This is the same technique we talked about earlier. Mark up that new channel right off those highs. Remember, draw them backwards. Then bring it off that low. And again, it's almost always going to be somewhere between that low and that prior high. It's in this little area right there. That's usually the sweet spot right there for that follow-up trade. Right? And again, we call them traps, right? They're called traps in our trade room. Trap low is usually a pretty easy money-making setup to failure off the low into that trap. Now, there's one more way to trade this. Where does the market want to go from here? It wants to complete what we call a pendulum swing. Now, what's a pendulum swing? Well, a pendulum swing basically says that ranges are balanced. Okay, they're balanced markets. So if a range is balanced and the market swings down by a certain degree, it'll usually swing up by a very similar degree, right? So balanced market, it swings down, it'll swing back up. It's like a pendulum that swings back and forth as we go. So we know where the market now wants to go if it can break free of the range high. Here's the third way to trade a range, and that is to trade a breakout, right? Breakout patterns. We talk a lot about breakout patterns, and we'll cover a few here on this NASDAQ. There are 4 different types of breakout patterns. We'll talk about a couple of them here tonight. So we know we have a potential range up here, and you can see they might be starting to form that range here right now. Let's say we find that range, and keep in mind, I have no idea what this range will be here. It could be a little bit higher, it could be a little bit lower. I don't exactly know where the range will be yet. It doesn't look too clear just yet. Here's my example range here for us here tonight. We find our levels of support. We find our levels of support below that trading range, and we're looking looking to buy off of those lows. Again, we want to wait for that pullback, right? Wait for those bears now to come in and try to get short. We use their stops as fuel. We then find that new channel and we look for that first test is the best test off the low of that channel, right? This all makes pretty good sense, right? The pendulum swing is the objective. We take some profit off of the range high. We leave a final target up around that pendulum swing. If we break through the pendulum swing, break the area, now we're breaking out and we're going higher. We'll talk about some breakout patterns here in a moment. Now, what do you think? Is it possible that the market may go sideways and we might get that deep D? Oh, absolutely it is. Absolutely. So if it really shoots lower, now what do? You use the 2-try failure. You go 1 try, 2 try, because now, remember, anytime we see a strong move in one direction, what do we expect? We expect they're going to try to retest that low, right? So we got to respect them. We got to respect those bears. That's why you give them 2 tries to do it. Stops are right here. And then again, the same thing. As we go higher here, think about where that trap is on the way back up to retest the high. 2-try failure, trap set up again between that area and that area. That's the good stuff on that re-entry before we go back up and retest the highs. So keep that on your mind as well. All right, let's talk about breakouts here as we go, and let's see. First of all, let's talk about the grind, right? The pop and grind. A couple breakouts going higher. Remember, all of these will also apply to the S&P 500. One of my favorite kind of breakout patterns is a pop and grind breakout. Let's say, for example, this market starts to grind higher here. If that is the case, what I'll do is I'll draw a trend line off that high. What I'll probably do in this one, because it is, if we do end up, the bottom line is when a market pops up and starts to grind up those highs like that, what I'll do is I'll mark a trend line off those highs. I'll bring it down and anchor it off a major swing, and then look for that first pullback. That first pullback, if I can get it underneath the moving average and underneath the prior swing, I can grab a trap setup, I can grab a failure setup, a pullback combination setup right off of that low. And again, we know they're trying to go back and retest the high, right? So traps below prior swings, failure patterns off the moving average as we trap in the bears who are trying to sell off moving average, and we grab that first pullback as it goes back up to retest the high. So if we do end up popping and grinding higher here, I'm looking for those channels. I'm anchoring them, right? We're anchoring them off some of these prior swings. I would love to think we can anchor off this big one. We just may not be able to get that big of a pullback, right? That might be the hardest part here. I think the most important thing right now, though, is if the market does go higher here, we still haven't quenched the kind of the thirst of these buyers. We still haven't given them a discounted price. So even if the market begins to go higher here, we still have to be thinking, wait, we're still at a pretty high price right now. We still need to get some sort of deep pullback, 1, 2, and then back up to retest the high. So keep that in mind as we're grinding higher here. We still want to wait for that pullback. I would also imagine too that maybe like a 2-try breakout, for example, right, would be a pop up, strong move up, shallow pullback, higher high in price, and a trap setup. That's one more of my favorite breakout patterns. I love these patterns, by the way, right? So again, strong pop up. This also applies to the S&P, right? Real strong pop up, shallow pullback, higher high in price, 2-try breakout or 2-try trap pattern. So watch that grinder as we go, right? Watch that grinder as we go. Kind of draw this thing up, right? Wait for that pullback, and we'll buy that trap failure pullback combo off the low of that channel. Be aware that a deep pullback may be in store here, most likely will be in store here because of the just excessive move here, and keep your eyes out for a trading range. So keep that on your radar as we go higher here. Stay patient and wait for that pullback. I think one more pattern that I haven't mentioned yet here, this will also apply to the S&P. We talked about that pullback those bears holding and jumping off the moving average to give us that 1, 2, 3 reversal and then getting that short, right? We talked about that before. This pop and grind could also happen here on the NASDAQ or the S&P. It pops down and it grinds down. That's usually a pretty good giveaway this market now has reversed. Anytime we see it kind of pop, and again, this one won't be as obvious as a 1, 2 jump. You know what I mean? It won't be as obvious as that 1, 2, 3 reversal pattern I just talked about. It'll be a strong pop, but then it will begin to kind of grind down. That grind down is usually the giveaway. And again, this could also apply to the S&P. Draw that trend line off the low, anchor it up at that high. And this is definitely where we look left, we find some of these prior swings, we grab those first tests, and we look for that retest of that low. Now, what do you think? What do you think the odds are that we get that pop and grind going lower? We get our short off the top of that channel. We take our profit off at that big low. And then what do you think the chances are at that point now? Here comes your deep pullback right on cue. And now the bears come in. They try once. They try twice. Now we got all their pain, all their stops right here. This now could easily be seen as the deep pullback that everybody was waiting for. The bears are trying to sell into some support levels coming down here. Again, we've already retested the low. So once those bears are chopping themselves up here, we now know deep pullback wants to retest that high. This is exactly what the good stuff is right here. 2 try failure. As we go higher, grab that trap and go. Does that make sense? This would be this would really be kind of a gift from the trading gods tomorrow, right? That pop down, that grind down, grab that short, retest that low, take the profit of the low. Again, there's a trend line coming down here as well. And then let those bears wrap that noose right around their neck. Once their stops get hit, we're buying the stops, we're grabbing that trap, and we're going back to retest the high. Right? I would love that tomorrow. That would really be a nice combination entry tomorrow morning in the trade room. And again, same thing could apply here on the S&P 500. All right, let's wrap things up here right now. You know how to trade the pullback. You know how to trade the range. We've talked briefly about breakouts. We'll cover a few more here on the oil. Okay. I hope you watched the entire video so far because we're going to wrap together a lot of what I've talked about so far on this last chart. Over on the crude oil. Now, oil was a bit, I think a bit surprised this morning. I got to my desk this morning with some fresh headlines out of the EU that they are proposing a ban on Russian oil. The irony of the whole situation, it's classic, it's classic panic buying right now. But the irony of the situation, the funny part about it was the proposed ban isn't going to take effect for like 3 or 4 months. So it really has nothing to do with the price of oil right now. But, as we know as traders, reality has nothing to do with the price of any of these markets, right? It's all perception, especially when it comes to oil. So anyways, EU proposes this ban on Russia. Nothing was passed. Nothing was, written into law or anything like that. And it won't affect us for at least a quarter. That produces, of course, this big spike up. Anytime we see a big spike in one direction, what do we always kind of expect to see? We expect to see a range, or we expect to see a really deep pullback. Now you'll notice there's one really important factor about this range right here. You'll notice that you would think with a market that makes this big of a move, you would think that buyers will be coming in right and getting in right below that low. Strong move up. What do we always say? Strong move up, shallow pullback, higher high. You would think a lot of buyers had their orders parked right around that 105, 105.10 area, right below that trading range there. You would think that would be where a lot of those buyers would be, and they did not get filled. And so now, as we go higher with another pop-up into another trading range, you have to wonder. For example, we're bullish. Spike and channel, right? Spike and channel. We want to buy at a support level below the trading range, right? That's a range right there. Absolutely, it's a range. And so we want to buy below that trading range. But what do you think? Is this a low enough price? I don't know. I don't think it is. I don't think it is. At this point, the buyers, they have to be hungry for a some sort of discounted price right now to get in, because from what I can see, there really hasn't been like a trader's entry. There really hasn't been a trader's entry, because we haven't really been able to get into some of these trap areas here. And so we're going to put this all together. The most important thing I think on this chart right now is that we're definitely bullish. But again, there really hasn't been any way to get in on a deep pullback or even a trap on the way higher, right? There really wasn't much to work with. Another big factor, I think, on this market right now is look where we are. We're really sitting at what really is a very important place here for crude oil, because we're right up at these big highs from surprise, right? That big low we saw on the S&P and the Nasdaq around April 17th also coincides with a big high up here. I mention this because if they can break and hold, if we can get above this 109.20, it does look like there's going to be a bit of a vacuum effect to 113. So if we break and hold tomorrow above 109, 109.50, I would say better tell the guys to gas the trucks up, right? Because it looks like the price of oil might be gravitating back to that 113, and we know that oil likes to go from 105 to 110 to 115. So this in my eyes a very important spot here on the oil, because it represents a major top. If we can break and hold it, we're going to probably get vacuumed, kind of dragged up into that 110, basically 113 area. Looks pretty inevitable if we can get and hold above this 109.20. All right, let's put all the pieces together on this. I think if you watch the video so far, you'll be able to see a lot of what I'm talking about. Buyers want to buy the pullback. They want to buy the shallow pullback. They really want to buy that deep pullback. I can only imagine how many buyers are waiting down here at some of these support levels below these trading ranges. That is definitely something on our radar right now. How about sellers? What do bears want to do? Oh yeah, bears want to they want to get that pullback. They want to sell that double top reversal, right? Bears want to take this thing lower and reverse it back down to, for example, last week's close. Let's not forget, guys. Tomorrow is a Thursday. So once we go to Thursday and Friday's trading session, last week's closing price, which on all of these charts is all the way back at those lows there, those become big magnets. I would imagine the bears get their hooks in this thing. They're going to want to take out that 104.11, and more importantly, they're going to want to get back down to some of these prior lows before this whole news, this whole EU ban started to announce here this morning. So what's the shallow pullback look like? Shallow pullback, traps, baby. Right? Traps are always going to be the best way to buy a shallow pullback. Why? Because again, we're at resistance overhead here. It's still it's bullish, but again, we're very high up right now. So traps are going to be fantastic. Or we get that deep pullback. Remember, on a deep pullback, beware of those trend lines coming down and get around them and use them. Deep pullback off the high. This is what we want. This is really what you want. You want that really deep pullback here. Get those bears once, twice, hit them where it hurts, right? Get that pain, hit them where it hurts. And then as we go higher, what do? You look left, you find that trap, right? And you grab that trap before what? Before we retest those highs. 2-try failure, 2-try trap. Mwah, money trade. Now, how about this one? Could we pop and grind down? Pop and grind. Find that channel. Grab that first test. Grab that short. Retest that low. And then again, we get those 1, 2. Buying it back up. Failure into that first trap on the way back to those highs, right? We just talked about that on the Nasdaq. So these are all very viable options here as we pull back here right now. What if we go sideways here still? If we go sideways, this channel basically disappears. If we go sideways, what do? We same thing before. We wait for the pullback, right? We look for those bears to come in. Remember, if it keeps going sideways here for a while, that range becomes a significant a clue. The longer we stay inside that range, the more likely we're going to see those bears coming in, that failure, buy it back up, grab that new channel, and of course, buying it again through that, right? Through that pendulum swing. Okay, same thing we talked about before. Breakout patterns. Okay, breakout patterns. Here's one. 1, move up. 2, pull back. 3, blast off the moving average. What do we call those? 1, 2, 3 breakouts. Mark the high, mark the low, grab that trap, grab that first test. It's a trap. It's a failure off the moving average. It's a pullback combo. First leg. Third leg is the easy target. 113 is where the market wants to go at that point. Or maybe it simply pops and starts to grind. Pop and grind. What do? We mark off that trend line off the high. We anchor it off that big low. You know the drill. Find that prior swing. Grab that trap. Failure. Pullback. First leg. Third leg is the target. Or maybe we get one of those easy money trades. That strong pop up. Real strong. Shallow pullback. Higher high in price. What do we always say? Traps, baby. One of my favorite entries on the long side. Again, anytime we see strong move up, shallow pullback, higher high in price, we're expecting buyers waiting down below that low for that move, right? Strong move up, shallow pullback, higher high in price, traps below that low for that next leg going higher. We're looking for that setup as we go higher here as well. What about a pop up into a trading range? Happened here. It happened here. It could easily happen up here. Pop up into a trading range. What do? We grab that failure, grab that pullback, and that breakout going higher here. Plenty of ways we can trade this as the market runs higher here. We drop. We pull back to the moving average. We jump off that moving average, right? Big, strong jump off that moving average. Not that thing, right? Not that, right? It jumps. It pulls back. And it jumps off that moving average. What do? We don't chase it. We mark that low, we mark that high, and we get ready for whichever entry setup we get off that first test. All right? Now we have a game plan for tomorrow. We're planning our trades here tonight on this video. I'm proud of you for sticking around all the way to the end. This is the easy stuff. This is the fun stuff. Tomorrow, we put this stuff to work. Tomorrow morning, 8 o'clock Eastern time in our trade room. Like I said, if you're like me and you hate missing the best trades each day, or you're sick of taking so many losses, or you're making too many mental mistakes, you're going to love our trade room. Our trade room is designed for a place to learn the strategy, trade along with us, with all the other members. Whether you're a brand new trader or you're an experienced trader, you're going to love our trade room. I've covered a lot here tonight on this video, so hope you enjoyed it. Make sure you grab the free trading course to learn the strategy we use, to learn the setups we use. That's a great place to get started. Don't be afraid to call the office if you have any questions. I know I go pretty quickly through these videos, but I can easily slow things down, make sure we have all the pieces that you need put together, the computer, the software, the data, the accounts you need, and make sure you're ready for trading tomorrow and every day with us in our trade room. All right, guys, thank you so much for waiting around. I know the video's a little bit late here tonight, so thank you so much for your patience. But a busy, as you can imagine, busy day here on an FOMC announcement afternoon. But get some rest tonight. We got Thirsty Thursday, Reaction Thursday coming tomorrow. Got a really nice setups on our radar tomorrow. We'll see what we get. Hopefully I'll see you tomorrow morning at the opening bell. If I don't see you tomorrow morning in the trade room, come back and see me tomorrow night. We'll get ready for Non-Farm Friday. The party keeps on going here on this video newsletter. But guys, enough for tonight. Have a great rest of your evening. My name is Joseph, by the way. Be well, be nice to each other, and you better be here tomorrow. Adios, amigos. Bye-bye for now.